Welcome. This series of videos is here to help you with ways to increase your family economic mobility. When I say increase your family economic mobility, I mean increasing the income and opportunities for your family. Today, we are going to talk about getting you and your child banked. What does that mean? It means making sure you and your child have a financial home base. At its simplest, a bank is a safe place to keep your money until you need it. It's also a place that is ready to help you grow your money and help you expand your opportunities. As you'll see, getting banked can also be another source of free money. Here's a quick story from my friends Clay and Eddie. See how getting banked helps them reach their goals.
We just assumed it would take too long to save money for any kind of big dream. We wanted to buy a house one day, but neither of us make much money. Eddie's grandmother told us about our state's housing and community services. They had a program called an Individual Development Account, or IDA. We met with an IDA staff person. He helped us set a savings goal, and we started putting in $50 each into the IDA account every month. If we did that and took some classes, they would match $5 for every $1 we saved. We learned about budgeting and credit scores and strategies for stretching our paychecks. Our goal was to save $1,200 in a year. With a 5-to-1 match, that meant the program added $6,000 to the account. In a year, we went from being afraid to think of being homebuyers to having $7,200 saved up towards buying our own place. Suddenly, having a dream doesn't feel so scary.
At the beginning of their story, Clay and Eddie were like a lot of us, afraid to have big dreams because they couldn't see a way to get started on achieving them. It's hard to dream big if all the little stuff seems hard, right? Fortunately, Clay and Eddie were able to find the helpers in their community. In this case, their state's Housing and Community Services Agency. In exchange for taking some classes, their savings program matched every dollar they saved with additional money in their individual development account. The program supercharged Clay's and Eddie's saving progress. Individual development accounts, like the one Clay and Eddie used, vary from state to state. It can take a little bit of looking to find one, but it's worth it. Even more places have savings programs for children. One way to build family economic mobility is to teach our children solid financial habits from the beginning through something called a child savings account, or CSA. CSA programs provide long-term savings accounts that help children, especially low-income children, build savings for their future. They vary from state to state, but all CSAs have a couple things in common. Incentives to grow savings. This might include a bonus seed deposit for opening the account, or might mean some sort of matching program that adds extra funds each time your child makes a deposit. Savings goals. The programs usually help with saving towards some sort of big goal like college or technical school or buying a house or starting a small business. Getting banked can be a source of free money for your family to help you and your children build for the future. But getting a bank account can also be a huge help right now, in the present. Having a bank account opens up all kinds of possibilities, like getting a debit or credit card, using payment apps like Venmo or PayPal, buying or renting a home, receiving your paycheck from your employer, and earning interest on your money. Most people in the United States have a bank account, but some people are still using way more expensive places that may seem convenient, but are really hurting you and your family. I'm talking about check cashing stores and payday loans. Both can trap you in a cycle that costs you money. Let's talk about check cashing stores first. At first, it seems so simple. You bring in your check, and they give you cash for it. If you're in a hurry, that might make sense and seem convenient. But check cashing services charge you a fee for that convenience. The fees range from place to place, but can be as high as 12%. Let's say the service near you is only 2%. If you cashed a check for $500, the store would be keeping 2%, or $10. If you did that every week for a year, that adds up to $520. You are basically working an entire week for free just to use that convenient check cashing store. By the way, if the service is charging 12%, that fee would be $60 per check, or a whopping $3,120. That's more than 6 weeks of work wasted over the course of a year. If you had a bank, you could deposit your check with 0 fees. Many employers will let you use direct deposit, which means on payday, your money goes straight to your bank account automatically. So skip the trip to the check cashing store and save yourself some time and potentially a lot of money. The other big danger are payday loans. We've probably all been in a position where we need to pay a bill or expense, but we won't have enough money until our next paycheck comes through. It's easy to say, oh, you should just wait it out. But that just won't work if the thing you need is diapers for your child or to pay the electric bill before it's turned off. That's how people get sucked into a payday loan. The rules for these kinds of loans vary from state to state. In fact, payday loans are actually banned in about 18 states. That's because the fees they charge can be as much as 400%. If you find that you are always short of cash for necessities, definitely check out Module 2 of this series, which is all about stretching your paycheck and using findhelp.org. There's probably a helper in your community who could work with you to solve the diaper problem or the electric bill issue. Hopefully, we're on the same page that payday loans and check cashing services are not helpful for you or your family's economic mobility. And opening a bank account can be easy. So, how should you choose a bank? The biggest thing you should check for is whether your bank is FDIC insured. That means the money in your account is backed by the US government. So, if something happens at your bank, your money is safe. You can check out the banks in your community by using the Bank Find tool at fdic.gov. You may want to consider a credit union. These are nonprofit banks that are usually federally insured and usually offer lower fees, higher savings rates, more personal attention, and easier loan processes than larger banks. You may also want to consider an online bank. These are banks that don't actually have brick and mortar branches for you to visit. Everything happens on your phone or computer. Because online banks don't have the expense of having a physical location, they may be able to offer better deals. As you look at the banks near you or online, be sure to see if your bank is offering a signing bonus, a matched savings account, a child savings account or CSA, or an individual development account, like the program my friends Clay and Eddie use to save for a home. You should also ask about overdraft protection, how to get a free checking account, and whether your account will earn interest. You should be able to get an account that doesn't charge you fees. And if you are worried about your banking history, for example, if your account was closed due to unpaid overdraft fees, you can still get a bank account. Many banks offer a second chance account. If you avoid negative balances and meet other requirements, the banks will let you upgrade to a regular bank account in 6 to 12 months. So, to sum things up, getting a bank account for you and your child is a great step for increasing opportunities and may be a source of free money. Check cashing services and payday loans are expensive. Using a bank account will save you money. When choosing a bank account, make sure it is FDIC insured. Be sure to check out the resource guide that accompanies this video for more ideas, and watch some of our other videos on more ways you can make things better for yourself and your family. And remember, you've got this.